webinar introducing D&B Finance Analytics, creating the bridge from credit to cash. Before we begin, I would like to introduce myself and today's speakers and go over a few housekeeping items. So I'm Kendra Harding-Smith. I'm the Director of Marketing for Finance Solutions at Dun Bradstreet, and I'll be your moderator today. Our first speaker will be Tim Vine, the Global Leader for Product Management and Finance Solutions at Dun Bradstreet. And also presenting today is Ryan Camlin, Senior Director for Product Management and Finance Solutions at Dun Bradstreet. Our presentation is scheduled to run about 45 minutes, and that will allow for about 10 to 15 minutes of open Q&A at the end of the session. A few housekeeping items before we get started. All the lines will remain muted throughout the duration of today's call. We will answer the questions, as I noted before, at the end of the webinar, but please use the Q&A box throughout the session to submit the questions that you may have during the time. And we'll try our best to answer as many of them as possible at the end of the session, time permitting. Lastly, I do want to let you know we will be emailing the recording to you of today's session, as well as a copy of the slide presentation. So be sure to check your email for an email from us in your inbox over the next few days. Okay, and let's get started. Today, what we plan to cover is the current business landscape and what's driving the need for change, how this landscape is driving our strategy in the context of credit to cash, and the foundational building blocks for our credit to cash strategy, and where Dun Bradstreet is at in currently building to that strategy. And then lastly, as part of the main presentation, we'll have the D&B Finance Analytics demonstration, where Tim and Ryan will actually take you through the capabilities that are now available in the solution. So now I'm going to turn over to Tim to talk about the current landscape for finance and how this landscape is driving our credit to cash strategy. Tim?
Thanks, Kendra. Hello, everybody. Some of you may have been on our webinar back in November and would have heard me talking then, and it's great to be talking to you again. So having set it up, Kendra, thanks very much for that. I'm just going to take a few minutes to lay out kind of how we see and the outside world, the market, what the market is telling us, and what that's informing in terms of our strategy around credit to cash that culminates in D&B Finance Analytics. So many companies are using different software systems for different functions. I'm sure that's true across your businesses, and also have relatively poor insight from disconnected data in those systems. Also employing many manual processes, which can lead to wasted time and inefficient use of resources. With these manual processes and lack of data-driven insights, that can actually mean inadvertently providing a poor customer experience. Things like slow approval times for credit requests, or maybe incomplete collections tactics. What if your company is calling people who are late to play, and how to handle that? Predictive data, connected data, can prevent those types of things from happening, ultimately leading to financial risk from bad debt and inaccurate forecasting. Again, back to poor insight, maybe inadequate data informing process, and leading to that disconnected and maybe slightly disjointed customer experience, which may not end up leading to repeat business. If you move to the next chart, please. We're just going to open up a quick poll, audience participation time, and we have a second poll coming shortly. If you can look at the poll online and please answer in the next few seconds. It'll be interesting to see how you all see these different challenges and your priorities today. I think as you take your time to answer the question, I think the poll is going to appear on screen so we can see how you're responding and if there's a clear leader. Okay, so there's a couple of items clearly at the top of the list, I would say. And maybe not everyone is quite completed, but there's automation of process, which is just a nudge ahead of business expansion and growth. and maybe actually one enables the other. Quite an interesting observation. Increasingly all about revenue growth, but doing it in an efficient fashion. Focus on margin and on EBITDA. So yeah, thank you very much for that. I think that's a very good illustration of really the story that we're actually trying to share with you today. So thank you for that. Kind of why finance analytics? What is D&B Finance Analytics? Really, we've developed D&B Finance Analytics to focus on these client needs, what we asked about on the previous poll, and making sure that our platform empowers finance leaders with the actionable intelligence to increase cash flow, automate process and workflow, and drive profitable growth, the two things that came out top of the poll. Everything starts with data on the left-hand side. Deep, relevant, fresh, local data across the globe to provide a comprehensive understanding of over 400 million businesses globally that we hold on our database, in our data cloud. Converging and connecting platforms as we move to the right-hand side. Platforms and system integration to gain that single customer view. Ease of implementation, easy to use, almost enjoyable software and solutions that you'll use to go about your jobs. We all know that IT, technology, and implementation resources are in very short supply. And then bringing the data to life with AI-driven intelligence, both to make informed decisions, but also to automate workflow and business process. Next slide, please. As we look at the strategic building blocks that we have assessed are critical for the bridge from credit to cash, on the left-hand side, let's call it traditional credit risk management, moving across to the right-hand side of credit risk and receivables management across the true end-to-end credit to cash cycle. These building blocks are critical component parts. We touched on this a little in November, and to reinforce the point, foundational deep data and content. And that's both the information that you know about your customers and potentially your prospects, and the information that D&B holds about those same businesses, connecting it together, cleaning it up, enriching it, layering analytics on top of it. So an analytical layer to bring that data to life, to turn data into actionable insight. User experience, and that's both for yourselves within your credit and finance functions, but also, as we'll talk through in the Clickable demo, the experience that you're showcasing to your clients. And all underpinned by the necessary security to ensure our data and your data is appropriately protected, so that you are operating with a level of confidence that you're using information that is secure, locked up, and particularly when it comes to proprietary data. They are the building blocks that are the jigsaw pieces that create the puzzle and create the picture for the end-to-end credit to cash process that we're going to be talking through. And actually, as we move to the next chart, is what we've brought to life with D&B Finance Analytics. So combining software, customer data with Dun Bradstreet Data Cloud to create analytically derived insights from a platform that delivers more intelligence than just software alone and just data alone. And D&B Finance Analytics is very much a two-part play across the end-to-end credit to cash cycle. From credit onboarding, automated decisioning, through to portfolio risk management, alerting, monitoring, and account management of your existing customer base from a credit process and a credit perspective. Key to this is process automation. You talked about this in the poll before. Entire portfolio management, not just looking at some of your existing customers, but looking across your full customer book, shining a spotlight on segments of risk and opportunity. And then an exception-based risk treatment strategy, not treating every customer the same, uncovering where real expertise is required, but operating on an exception base. Gone are the days of the annual health check. It's now a continuous, always-on risk management process, which then flows into Receivables Intelligence. Fully end-to-end global receivables management with integrations into ERP, CRM, and payment systems, AP portal integrations, bank lockbox integration. And that enables a risk-based collections prioritization approach, a proper risk-based approach to collections, a self-service payment portal, allowing you to view and pay digital invoices, sharing documents, upload remittance, a robust dispute and deductions workflow, cash flow forecasting, and then cash application or cash allocation, and bank reconciliation, all the way through from who should I provide credit terms to, all the way through to collecting cash and applying it in the bank. And all of this on top of a foundational layer of data and analytics from Dun Bradstreet that's connected through to the data that you hold about your customers and prospects. If we move to the second poll, again, audience participation part 2. If you can review and answer the poll on screen over the next 10 or 20 seconds, we'll see what the results are like. Okay, here we go, about 230 or 40 responses. This is a slightly closer race, but when asked the question, what's the greatest challenge to your team's success? The narrow leader is manual labor-intensive tasks, followed secondly, close behind by financial risk from bad debt. And then maybe not so close behind, we've got inconsistent varied reporting of data, but starts out with manual labor-intensive tasks and really how to think about scaling, automating, and the efficiency that creates that may then lead into the ability to better manage the financial risk from bad debt. These are obviously all somewhat connected. The first domino falls, the rest fall into place. Thank you very much for sharing that. Very interesting. Okay, we're now going to move to the next part of the session today, where both Ryan and I are going to walk through a clickable demonstration of D&B Finance Analytics. And I'm going to cover the credit intelligence component and then pass to Ryan for the receivables management component. So I'm just going to share my screen. Okay, I'm assuming that my screen can be seen. I've taken you to the interactive demo that we've built for D&B Finance Analytics. While it's not the live product, it's a mimic of the live product and will enable us to be able to walk you through the key use cases that this solution actually supports, as I talked through the credit intelligence and receivables component. I'm going to talk you through new customer onboarding and managing existing portfolio risk, and then I'm going to hand to Ryan, who's going to talk through the receivables intelligence component. Everything starts with a new credit application. So as I go to the kind of automation of the customer onboarding, which through the polls you've talked about as being a key focus area of streamlining and scaling and the efficiencies of reducing a manual process that leads into an automated process. I'm putting myself in the shoes of the credit manager for Coffee Creations. On my Coffee Creations company website, I've created an online credit application process for new and existing customers to apply for their credit terms. A potential new customer would come into this screen, access it, and submit an application for credit. A potential customer of mine would fill in the form, find themselves against the D&B database, select themselves from a list of potential candidates, and then complete the rest of the form. Now, some of you may already have somewhat of an automated credit application process. Some of you I know from experience will have an offline process where it's either handwritten or typed and emailed, and it just creates potential for error, and it also creates inefficiency in process. Just imagine the flow of this when it's connected on your corporate website where potential customers are seeking credit themselves and interacting with your customer experience. Completing the credits application, both in terms of finding themselves, but also details around shipping address and invoicing address and the products they want to buy and the amount of credit they're seeking. Once the application is completed and the terms and conditions that are specific to me as a credit manager here at Coffee Creations or any of you in your businesses, the application can be submitted. That application is then processed through the back-end rules engine that sits within Finance Analytics to come up with a response to the credit request. And in this case, it's an approval, which is what we all want to see. That will be presented back to your customer. That's presented back to my customer. However, it's very important that that's just not floating in the ether. That application is then grounded in finance analytics. I'll take you there in a second. An alternative approach, even if you don't want to have a credit application on your front-end website, we have a direct connection into salesforce.com so that your salespeople and even yourselves can adjudicate customers from the lens of the SFDC system you use. Again, going away through to your rules engine, your credit policy within finance analytics, and then coming back with the answer. And this time presented within the salesforce.com screen, the status of the application, the amount of credit requested, the recommended limits, the terms, and so on and so forth. And all that delivered natively back within Salesforce. However, it's not just in Salesforce. It's not just on your website in the credit application. I think just as importantly, this information then sits within finance analytics. So myself as a credit manager here at Coffee Creations, I can see all the applications that my customers have submitted through my website. I can see all the applications that others in my organization might have submitted through Salesforce, and my credit team have submitted through finance analytics as well. Many routes into the same place. So I can see the same decision reflected within the application for this business within my tool. I can then take the next step in the process, which is if this is a company I want to grant credit to, I then add it to my portfolio. I create an account. I add an account number to that. And then I can track that customer going forward because I am now going to ship goods and services, a few $1,000s worth of them to this customer. And I care about this customer going forward. I do want to manage their risk, their ongoing profile, as I think about the ongoing credit limit and credit exposure, and then leading into the collections and revenue management process. I can then set up rules to determine how to treat those customers going forward. Again, moving from a manual annual health check, where maybe I'm one day in advance of something bad happened, to an always-on process that I can run rules to constantly re-decision my customers, to tell me when something's changed, and again, managed by exception rather than managed by time. And once it's added to my portfolio, this is one of the huge advantages we've made with finance analytics, is it's registered for global monitoring, and I'll talk about the global scope of that just shortly. Now, that was very much a happy path process, where a customer of mine or a prospect has come in, sought credit, requested a credit amount, it's gone through against my credit policy, come back with an answer. It's a positive green light. It's what I want to see. I've taken on board that customer, and I'm now tracking them going forward, and I've given the green light to ship goods and services to that client. However, not everyone is happy path. For the applications that fall into the pending status, that's really where the deeper, more detailed information within finance analytics comes to life, where it's a borderline decision, or it's a particularly risky customer, or it's a particularly large piece of business, or a number of other reasons that you might have set up your rule set to say, if it looks like this, I don't want it to be straight through processing because I need to spend my expertise assessing that customer. And that's where the deeper dive into what you all know and love around the kind of traditional transactional credit report. And increasingly, this is becoming the exception process rather than the first process. Deal with the easy to make decisions through an automated process, through a credit scorecard and the application of the credit policy, and go through the deep dive where the time is needed to spend more time doing a more forensic assessment. And this is where all the different sections of the data that D&B holds on each of the companies around the world can be used to inform that decision. We have a summary chapter that provides a little bit of data across most of these sections, which you can customize and tune to determine what you want to see at the top. And then all of these detailed drill down sections around the detailed risk assessment, trade payment data, how are they paying others? What is their paydex score? What is their payment profile? Legal event data, any bankruptcies, suits, liens, judgments, UCC filings, and so on. And these are market specific. These are just US examples. Other chapters, of course, these are some of the most common ones that are assessed to essentially make a judgmental manual decision, because the scorecard was either tuned to say, we're not sure, or it wasn't as obvious a decision to make. And if you think of the advantage of tuning and focusing your expertise on the companies that really require that expertise, rather than this standard process you have to apply manually for every single customer, think of the time saving that creates, but also the ability to spend the time where it's needed. And again, once that decision is made, this time manually, adding the company to your portfolio, taking advantage of proactive monitoring and changes in that business going forward. So it's this always on processing rather than forget about it for 6 months until you run your next health check. So that covers the onboarding, increasingly automated with the manual deep dive as a backup. I'm now going to move into global alerts and monitoring. This is where I'm managing the risk of my existing customer base, and Finance Analytics is telling me what's changed and what do I need to care about and what action do I need to take. Now, for many years, we've been focused on providing monitoring alerts on US and Canadian companies specifically. And with Finance Analytics, that is now global in scope. So changes across the risk profile and the data profile of all of your customers, regardless of where they're based around the world, are now embedded within this global monitoring and global alerts capability. Think of this as almost like an email inbox. How can I manage my customer base by exception so I only spend time where absolutely required? Through this global alerts inbox, I can filter to the alerts that I really care about, checking boxes, changing the date period, sorting by the type of the event, and then the ability to drill down through to the ones that matter. It's separating almost the wheat from the chaff, what matters from the noise. And managing this as an email inbox, I want to make sure I react quickly to ones that matter and have the ability of segmenting those that do from those that don't. So it's very much a daily discipline. And as with all these things, a little bit of time spent every day has huge benefits in the long run. So this example customer in the Netherlands, I've decided that I want to drill down on. There's been a change. I have a significant amount of outstanding debt on this customer. The ability of us connecting accounts receivables data, if you've provided your accounts receivables data into the tool, combines together both what you know and what you're exposed to, as well as the changing D&B risk profile. What's the detail of the alert that I've seen on this company? See the details of that change. Any previous alerts I've seen on that business. It hooks it all together, both for the accounts that you provided in, as well as at the DUNS number level and the family level. Helps me to understand if I need to drill any deeper on any individual accounts. And ultimately, what I'm getting to is drilling down to the same place I would go to if I pulled a full report to do an onboarding assessment. This flow has taken me for a company I care about down to the deepest set of data so I can, again, reassess that business because something has changed and work out whether I need to take action. I'm now going to move into the second part of the credit intelligence portfolio management side, which is portfolio insight. Now, for those of you that were familiar previously, you would have known this as Portfolio Risk Manager, or PRM. Now, Portfolio Insight, again, has the same global scope as global monitoring, where you can comprehensively assess the risk and growth opportunities in your portfolio globally. If you choose, you can blend your aging data with Dun & Bradstreet's global analytics for over 200 markets around the globe and start to get that real profile of risk of debt, age of debt, and size of debt. You yourself know size and age. We can present a view of risk, combine that together. That's a very powerful combination. Even if you're not able to provide your accounts receivables data into the tool, it's still a very powerful business information tool looking at the risk profile of your customer base. And then you can connect it separately by reviewing in your accounts receivables system. And again, this has moved from being focused on US and Canadian companies to true global scope. A summary dashboard has been brought in for everybody, regardless of whether you do or you don't provide your accounts receivables data in. And then at the additional higher tiers of the Finance Analytics product, more capabilities get unlocked. Now, at Coffee Creations, I have shared my full AR with D&B, so I can now see what I know and what D&B knows in one place. And I can start to see a risk profile of delinquency risk against failure risk, or I could do this by risk of failure versus age debt profile. I can drill down on any of these cells, on any of these sections, and get down to the list of companies that make up that group. On this instance, I'm going to filter by chance of paying late in the future, by chance of failing. And I can see shifts in risk right there in the tool in my fingertips to identify both upsell opportunities, but also to understand what mitigative action I need to take on those that have moved and increased their risk profile from a less risky to a more risky, or a more risky to a less risky. It's all about trying to identify common trends and themes across my customer base. And as I said, any of these places that you would want to click on to drill down, you can. Maybe I want to look by corporate exposure. So looking at all the accounts I have, all the businesses they're connected to, and the corporate families that those customers are part of. So I can really understand corporate credit exposure and corporate credit limits. How many accounts I have in a particular corporate family. I might change my treatment strategy if I'm aware of a more global exposure, or multi-market exposure, or multi-business exposure, than dealing with my customers on a one-by-one basis. Any of these places, any of these dashboards lead to a list of companies, the companies that make up that characteristic. So here I've got looking at a 3-month risk change from moderate risk to low risk of delinquency, because I'm looking at how I can create opportunity for my sales teams for companies that have got less risky. And if I want to drill down further still, I can select any of these companies on the list and drill down again. This time I'm going to pick the Gorman example and take myself right back to the place that I could have been doing a manual credit assessment, or drilling down from a monitoring alert. All roads lead to the same place. Then I can roll back up again, and I can look at a different section of my portfolio and take a slightly different action. And that's the power of having your entire full portfolio within the tool. And then even more powerful, connecting it with your accounts receivables data, so you can look at what you know, which is your age and your size of your debt, and what D&B can provide a view on around the risk of your debt, and really start to work out what the treatment strategies are going forward. And actually, that's a perfect kind of springboard to Ryan, who's now going to take it to the next stage of credits to cash as we think about receivables intelligence.
All right, thank you very much, Tim. So I'm going to bring my screen up now here. And, so as Tim articulated, for this, this next section, it's really bringing us beyond credit into the receivables management. So I'm going to start with covering collections management portion. So when you first log into Receivables Intelligence, if you're a manager, this is the view that you would see. This would give you a snapshot picture of your accounts receivable. This is directly connected in to your ERP system, where this could either be a real-time connection, typically it's a daily connection where this data is being updated. But the idea is it gives you this picture of both how your cash is performing, and then we'll talk about also how your team is performing. So here you'll see the portfolio aging, and then here you're getting a projection of your cash flow on a week-by-week basis. And this is looking at when we expect invoices to be paid, whether or not we have pages in the system, and then assigning some week-to-week cash flow based on that information. And then here we're looking at what are the different drivers behind the performance. So things like disputes could be a major driver of how our accounts receivable is performing. So from this view, you can get to understand how are disputes trending over time, or are we seeing an increase in disputes, and then what are the reasons that are driving the disputed accounts. And this would allow you to then drill into a certain area to maybe address something with the billing team, or address questions and issues around damaged goods or proof of delivery. And then here, you're also getting a view into the team itself. And linking back to some of the survey questions, this is really an automation tool, automation platform. So it's going to help to automate these processes. It's going to help reduce the amount of manual tasks. One of those is really assigning out tasks to the team. So team members are assigned a portion of the portfolio. There's a whole org hierarchy, so we could understand who supervisors are, how they roll up into different parts of the organization, to then assign out that work based upon some logic, whether that's geographic, certain industry verticals, certain dollar size of accounts. From this view, you can then get to understand how are different team members performing against their targets. How much cash are they collecting? Who's really the most productive on the team? And you're just really getting that in a single picture at a glance here from this view. Now, for an individual team member, the experience they would have would be to log into their user dashboard. And so you could imagine this is the first place that someone would go to start their day, kind of look at what are the top activities for the day, what are the top accounts based on the outstanding balance, the past due amount, and then also get a view into what should I be focusing on for the day. So really being able to prioritize the most important, the most critical tasks, and then you could drill down into each of these individual areas and see a list view of my calls, of my critical items for the day. And then ultimately that they'll be able to drill down into an individual account. And from here, they would get a picture of all the activity that's happened around that account. How are their payments performing? What's the risk of that account? And then take action from this area. And you'll see here there's a whole set of activity that's tracked within the system. So any emails that are sent out, any notes that are captured, really any back and forth communication between your company and an account is going to be captured into this activity roll-up. And then you'll also see there's a whole series of tasks on this account. Those tasks are either manually created, primarily they're automatically triggered. So what's sitting behind this tool is a strategy engine that's doing things like sending out automated dunning notifications, automated emails, account statements out to customers. It's also automatically assigning tasks. And with D&B, those strategies are risk-based strategies. So we're taking our predictive analytics, the data that we have, and then we've built some best practice templates to assign risk. And that's going to allow the team to really focus on the highest risk customers and really start to work those accounts to drive meaningful changes in the AR performance. So for example, you may want to get a high risk customer to a call, much faster than a low risk customer that would self-cure. So within your high risk strategy, we would have a trigger that would say after a certain number of days past due, create a task and assign it to that team member. And so all that automation is happening in the background rather than having to do this manually. And then even from this screen, there's many actions that could be taken. So whether that's sending an email or conducting a phone call or updating a status, all that's happening from this single screen. And then there's templates that have been built for common activities like sending a follow-up confirmation. And then of course there's all the invoice details. So open invoices, closed, disputed invoices, and even payments. So getting a view into what payments are associated to this account, whether they've been applied or unapplied. And then overall, how has this particular account been performing in terms of their aging? And you'll see here, not just in the strategies, but even on the screen, there's the ability to drill into the risk information and then see the D&B scores right from this view. And then the link back to credit intelligence is that these accounts are shared between the systems. The data is then shared between the systems. Even information like the ability to create a custom score in credit intelligence, that custom score could then be used to drive the collection strategy. And so you'll see that score here. And that's how this account is ultimately scored. And then here's just a view into disputes and really the workflow around disputes. So an account could be placed into dispute. There's a whole series of workflows that can be built around disputes to escalate to different team members, to send information potentially to a manager, to another department, to sales, even feeding that information maybe down to a CRM like Salesforce. So I'm going to move now from collections into cash management. So similarly here, you're getting a view into the payments. So how are payments coming in? What types of payments am I receiving? Am I really driving from kind of manual check-based payments into digital payment forms? And then how is the team performing once again from a productivity standpoint? So you're getting that view here into user productivity. Now, what sits behind cash management is also an intelligent cash matching system where the tool is connected in with the bank lockbox. It's reading those payments coming in from the lockbox and then automatically matching them to the invoice. So the value there is really removing that manual work of having to manually apply payments to an invoice or that automated cash application process. And this is giving a view into all of those payments that essentially had matched, and it does this based on probability. So it could match on an account, it could match on a name. It actually gets smarter over time, kind of understanding when a payment was linked previously, where did that payment come in from? How can I then match that to an account? So it's really an intelligent matching system. But of course, there's a portion that's going to fall out from that automatic matching process where payments then do need to be manually applied. And then there's tools here to make that process more efficient for the user. So here you're getting a list view of all of the unapplied payments. You could then drill down into the payment details, and then ultimately action to manually apply a payment directly in the system, whether that's a short pay, reversal, all of that, those types of applications can be done within this tool. So where I want to move to is the payment portal. So with the payment portal, you would be able to offer this to your end customers. So your end customers would log into the payment portal. They would then be able to view their account summary, and they would also be able to view all of their invoices and payments, and then make payments to invoices directly through this tool. They could also communicate back and forth with the collections team, and they could see that message history directly in this tool. So I'll share that with you. So they could see who the contacts are that you have on the particular account. And then here is where they could put in a message. They could send that message that would then go back to the team. That would also be logged in that activity roll-up that we saw previously. And then they're going to be able to view a history of all those messages within the system from this portal as well. So, and then this portal itself would be branded based on your company's logo, your company's color scheme. So it would actually feel like they're really going into your company's experience, and then really collaborating with you through this tool. And so really the value here is creating that customer experience really end to end. So you think about that automated email that goes out. That automated email would have a payment reminder. It would have a link in that payment reminder. They'd be able to easily click that link, go to the portal, see their open invoices, make that payment online. They can decide how much they want to pay, which invoice they want to pay. If they want to set up a monthly payment, they can set that up through the tool as well. So it really creates a great digital experience for your customers to actually be able to go and to pay this way. And so here we're just then entering, they could pay either with a credit card, a business credit card, or they can set up a bank transfer as well through this tool. So this is just an example of a bank transaction or a credit card transaction where they're going to enter in their card details. And then from here, they'll receive a payment confirmation. And then that payment is now automatically matched to that invoice since the customer self-selected which payment to match to. And then ultimately that's going to reconcile back. So that's what wanted to take you through. So really just that, now with D&B Finance Analytics, that end-to-end credit to cash experience, and all underpinned by D&B's data and analytics. So with that, I'm going to pass it back to Kendra for Q&A.
I wonder if Kendra might be having issues taking her phone off mute. That's something that's hit us all over the last year or so, hasn't it? Thanks for that, Ryan. As I said, yeah, we're going to move into Q&A.
Yeah, thank you very much.
Hand back to Kendra.
Yep, thanks very much. Sorry about that. You were absolutely right. I did everything except unhit the mute. So we're going to open up now for the Q&A. Thank you both for taking us through the demonstration of the credit, the robust credit to cash capabilities that are now available in that new global D&B Finance Analytics platform. A lot of questions have actually come into the queue while the session was going on, starting at the beginning with Tim, as you were going through the online credit application capabilities. We had a question regarding in the online availability for credit app, could we limit the availability of the app to only customers who have been registered with our business for 1 year? So are there customizations and caps that we can put on that capability, Tim?
That is a very good question. And I'm not sure, in all transparency, I'm not sure I know the answer off the top of my head. Generically, the app can be configured to only present for certain scenarios because it's connected to a rule set behind it that drives it. So I think the answer is yes, as long as you can identify which of your customers have been registered with you for a year or at least a year, and it's a field that could be used in the scorecard that could drive when the app is presented and when the app is not. But I appreciate that's not a perfect answer. We'll take that away and we'll come back and confirm exactly how that would best work. It's not infinitely configurable, but it's pretty flexible. So I think yes, but I don't want to commit to that. I want to take it away and check back with you because it's a very specific question.
Yeah. Okay. Ryan, this next question is really directed at you. In automating cash application, if there is a discrepancy, how is it handled?
Yeah, so if there was a discrepancy in the automated matching logic, there's a few things that you would see. The report that I was sharing on the screen actually shows you really for all history, you can filter to a certain time period, all of the payments that were automatically matched. You would then see the probability that the system matched those payments with. And if there is a specific discrepancy directly through the user interface, you can actually go in and you can address and fix that discrepancy on the screen.
Okay. A question came in. I think you may have answered it directly to the person that asked the question, but I thought it was really applicable, Tim, and actually Ryan, to you as well, to really many of the applications and capabilities that you presented today. And the question was, what is involved in submitting an aging file into D&B Finance Analytics? And specifically the person asked, is it in an Excel file?
Sure. So why don't I start, and then Ryan, maybe I'll miss a certain portion. There are multiple ways that you can. It can be as simple as you create an Excel file of your accounts receivables out of your AR system. And within Finance Analytics, there's a section within the Tools section where you can load that file into Finance Analytics. You would map the fields in your file to the fields that D&B has in the system. And that then configures the job that you run, and then you click upload and the file loads into the system. And we take that file away and we match it. And we assign a DUNS number where we can find a match and then bring all the data to life within the portfolio, within the dashboards we showed. And depending on the level of kind of approach you want to apply to the accounts receivables, then leading into the receivables management piece. That's kind of almost the old-fashioned way. I'd say increasingly it's an automated process, either through secure file transfer or through API integration. So there's a connection from your system into our system, and then it's a kind of an implementation job. But once it's done, the data is almost continuously flowing. They're the different ways. So you can do it completely yourself, we can do it on your behalf, or we can take advantage of modern technology. Ryan, I don't know if there's anything to add to that from the receivables side.
I think the only thing I would add to that, Tim, is yes, absolutely Excel. And then because of the, over time, the plethora of different systems that we've integrated with, there's a lot of flexibility in terms of the file formats, the delimiters that that we can take for integration. It could be, typically it's file-based through SFTP. But there are customers who now are starting to have a preference for API-based connections, which is a more real-time connection. So those are all options that are really available, and it's really tailored to the needs of the business.
Okay, great. Thanks very much. Next question. Are there sections of the D&B Finance Analytics that we can choose to implement? So the examples given were like, could it just be the payment portal, essentially customizing what we want? Can we basically be modular?
Yeah, I guess I can answer that one. And the answer is absolutely. When you think about automation, especially within these use cases, you may not want to kind of address every single part of the business in one shot. And so we've made the ability to purchase this in a what you could say in a modular way. So if it's a need around payment portal, if it's a need around collections management, or a need around cash, or certain parts of credit, there's a lot of flexibility in terms of making sure that what you're purchasing is really tailored to your needs, and that it allows you to really evolve over time and adopt more and more automation across these different use cases.
Right, and the same holds true, not just on the receivables intelligence side, but also on the credit intelligence side.
That's right, yeah, that's right.
Yeah, okay, great. There was a question that came in, let me find it. Is a surcharge configurable for credit card payments? And Ryan, that's obviously directed at you.
So at this given time, I'll answer two questions that I saw in here, which was, who is your merchant processor? And so for one, right now our model is really integrating with your processor, although we are in talks now to sign a partnership and have a specific processor that we can recommend and work with. I mean, one of the benefits that you'll get with a system like this is moving from level 1 to potentially level 3 payments. So there's definitely benefit, even with your existing processor, to get better interchange rates and fees. As far as the specific question on if you can apply a surcharge, I believe that that's the case to put that functionality in there, but I'd have to follow up and confirm for that specific one.
Okay, great. Thank you. So we'll follow on with that and get back to you. So can we add personal credit scores into our scorecard to be analyzed? And Tim, I think that one is directed more to you.
Yes, absolutely. So the scorecards are both a combination of what D&B knows about the company and what you know about the company in question. So long as it's a a recognizable type of field for a scorecard to work, either yes or no, or some Boolean logic, or how much or how big, or a monetary amount, they can be set up as kind of tiebreaker rules within the scorecards. Again, quite a specific question, and we want to make sure we give a precise answer. So we'll capture who exactly asked the question and follow up in detail afterwards. It's all about how to set the scorecard up in the right way, so that it's a balance of the D&B attributes and your own attributes.
Okay. Okay, here's it's a rather broad question. You covered a lot today, and the credit cash process is obviously very complex. Where would you recommend we start?
Okay, that's quite a big, broad question.
It is, right?
Yeah, but I can appreciate why it's been asked. So I think ultimately our recommendation and what we see as best practice is to start with your existing customer base. And I say that because you really do only have risk when you've provided goods and services to businesses and you haven't been paid for those goods and services. Certainly when you look discreetly at kind of financial credit receivables risk. There's potential risk of those you could be dealing with that you haven't quite made the decision on yet, but the risk is only financial and true when you've opened yourself up to trade debt and accounts receivables exposure. So that's why I would always recommend start with the existing customer base. What do you know about your existing customer base? What would you like to know about your existing customer base so you can act accordingly? Understanding both the combination, as I said, of what you, as I said earlier, what you know and what D&B can bring to the table. Hopefully you saw that through parts of Finance Analytics in the Clickable demo today. Everything really does start with your existing customer base, understanding the entire view across that base, not just selecting specific companies, but looking at it in totality. And that then informs downstream processes around receivables management, upstream processes around extending or reducing credit limits. And then when new customers that are thought to be new but are actually existing customers come in seeking additional credits, you've got the ability to validate that they actually are an existing customer and treat them accordingly. So I think everything anchors to the existing customer base. That's where I'd always recommend starting.
Okay, good. Next question, and then Ryan, I think this one is directed to you. If there are exceptions preventing payment, will a customer be able to enter a message for delinquent invoices?
Yes, so they could do that through the portal, through that messaging tool, to be able to share those messages back and forth. Yep.
Okay. Looking here, there are quite a few questions. Oh, but this one's already answered. Can you pull in customers' financial statements from past 2 years to provide more specific risk analysis? And Tim, I think that one would be probably more specifically towards the credit intelligence solution.
Yeah, so I'd say manually there is an attachments section on the, if you remember the deep dive screen where you saw all the different chapters of data, trade data, and so on, there is a section there for attachments where you can upload any documents that you may have received either from the potential client or customer or other documentation that supports the information that you're kind of sourcing from Dun & Bradstreet. So there is an attachment section, and once you load in an attachment, it's connected to that record within the system until you want to disconnect it. So that would be, I think that's the gist of the question. That would be on the manual side. And again, similar to the question around other scores, if the information can be kind of plugged into and supported by a scorecard, then you can start to apply that in the automated space, as long as there's an input for that data. But I think the question maybe was more around financial statements that have been provided as part of a credit application process as a document. And assuming it was that, then that's what the attachment section is all about within the credit report.
Yeah. Okay, thank you. Can we use the system for just credit application and credit history? This may have been answered before, I don't remember. Ryan?
Yeah, probably more of a Tim question, but I believe the answer would be yes there, where if it's back to the modularization of the tool, where, if the purpose was for really focused around credit application and tracking that credit history or storing those customers in your portfolio, that's certainly the core use case for the credit intelligence. I don't know, Tim, if there's anything else you want to add to that.
Yeah, I apologize. I was trying to double task by answering a question in the chat box, and I actually missed the question you asked, Kendra. Could you ask again?
Yeah, let me try to find it actually,
because
it was the last question and I had already closed it out. Oh my goodness, I did lose it. No. Can we use the system for just credit application and credit history? There, we find it.
Oh, okay, all right. So as a method of I think I'd interpret that to be as a method of collecting credit applications as the end result itself, rather than as a means to an end. Yeah, the online credit application components we would recommend connecting it to a decisioning engine so you can get back the answer to the question being asked. But if it's as a kind of a single component part, it can function on its own, where you're using it as a kind of digitized method of harvesting credit applications, even if the next step in your process is to then conduct a manual review through a different process and isn't connected directly to a scorecard. It's a somewhat disjointed process because I'd say it doesn't really achieve a connected flow. And the vast majority of clients that are using the credit application concept I showed with coffee creations have it connected to a scorecard that gives an answer to the question, so you can get straight through processing as much as possible. But if there's a reason why you'd want to have it as a standalone thing, that is possible.
Okay, great. I think we have really only time for one last question before we close out. Cash application deductions work. How often are these updated in the collection's aging information? Is it real time, or is it batch or overnight? For instance, if a collector is working in the afternoon, does the cash application work that was done that morning remove items paid, and rules for tasks and dunnings would be updated real time? Ryan?
Yeah, so I think this would be dependent upon where that's being updated, and then also kind of preference for integration. So typically when it comes to payments and lockbox integration, those are usually happening multiple times per day, if not every 15 minutes. And then how often the output is actually sent back to the ERP system. I think once again, that can be structured depending upon specifically what how often you would like to have that information sent back, whether that's, every hour, every 4 hours, or once a day. And then similar on the collection side with the integration with the ERP, whether or not that's a real-time connection, multiple updates throughout the day, or a single day update. Typically, we see many customers kind of going for that single day update on the collection side, but then multiple updates on the payment side.
Right. Okay, great. So it's kind of a preference thing. Okay, as noted, we're really at the top of the hour. So I do want to thank Ryan and Tim and everybody that joined and attended today for joining us. As noted at the beginning of the webinar, we've recorded the session. And so please look for an email in your inbox over the next few days. We'll be sending that out. It'll include, that follow-up email will include the recording of today's session, a copy of the presentation slides. And again, thank you. We look forward to you joining us for future webinars. We want to hold these on a regular basis to keep you in touch with any product introductions and updates that we are doing. It's part of our ongoing effort to keep you apprised with everything that is happening, as well as some best practice informational sessions. So thank you and have a wonderful day.